So we can open that. We can get some of the questions we want to do inside that first paper. It was the which sitting. So, but you can know the sitting here, but as it is just written BDA question 21 to 25. So if you open, we want to see to carry out some of the forecast, financial forecast under a specific assumption. Financial forecast under a specific assumption. So this one is you're forecasting, like when we told to prepare a financial statement under the specific assumption, is basically your projection. You are doing a projection given certain assumption. Like if you check this question, I want to copy it so that I don't interfere with that question again. I'll have to use later. So if you see this one is a Z limited, which we have the P&L and the statement of financial position and the financial statement. So the two of them. So you have been told the following financial statement relate to set limit for the year ended that 1st December 2024. So they have given us the financial statement. Okay, good. So now you have been told you are required to prepare the financial forecast for the next 5 years commencing 2025, given the following assumption. Are you able to open? Because I've never seen your work. So we can open your Excel, you can even open yours, we can do together. It is possible. This one we don't have like adding and subtraction. This one will be using this Excel. We click the formula, it runs everything. So don't say I will do after class. So you can use what do we call? You can use Zoom phone and then laptop. You open that, we do together. So we have been told now, this is the assumption 1 to 8. So revenue and purchases are expected to grow at the rate of 10% per annum. Good. Number 2, gross profit is 30% of revenue, and this will make easier to determine the closing stock. So which means we will not be given the closing stocks, we will be using this assumption. Administration expenses will grow at the rate of 5% per annum. Selling and distribution expense will likely to grow at the rate of 10% per annum in line with revenue. So, which means, as the revenue grows or grow by 10%, also this one grow by 10%. Depreciation and amortization is an average of 10% of the previous non-current assets, which means depreciation is the 10% of the previous closing non-current assets. Interest expense is 10% of end of last period balance of the loan. Income tax expense is 30% of the profit before tax. Dividend is given as of 40% of the profit after tax. So this is the assumption which we have to prepare for P&L. And this is for balance sheet. Then current assets are expected to grow at the rate of 5% annually. Inventory is determined from the profit or loss, which they have given us that assumption here. Trade receivable will be 2 months of credit sales. Okay. Cash and bank are expected to grow at 5,000 per year. Share capital and share premium will remain constant over the period. Long-term bank loan will be balancing figure in the state. Long-term bank loan will be the balancing figure in the financial statement position. Trade payable are 2 months of purchase. Tax is payable at tax payable is 30% of the tax expense, which means 60%. So out of 100, they are going to pay that out of the tax liability, they are only going to pay 40%. The 60% will be, I would say, tax payable is, they're going to retain 40% as a liability. Share price is expected to grow at the rate of that one per annum. So they need the financial forecast up to 2025 and this one. Good. So we may open your question. Good. Yes. So the first thing we do, you put the cursor in A8, select that up to this retain earning. Copy Control C, or we can even do the forecast here. There is no need for us doing the double work. So just this is 2024. We can have 2025 here, 2020 up to 2020. So we can copy this. Sorry, we need 2024. So what you do, select this, Control C, put it here. That is 2024. Now we have been told that to do up to for next 5 years, which will be up to 2029. So in the next line here, just say equals this plus 1. Click enter. Umefanya hivyo. Now select this. Up to that, I think it will end there. Click Control R in your keyboard. Control R to copy it across, which we don't need this one. We only need up to that point. So here, just write forecast. Write forecast. Up to that March, and that is our forecast. That is our forecast. Thereafter, we can copy this again so that we can have the same format. Tuko pamoja mpaka hapo? Okay, good. So here, put the cursor. Now we are doing a forecast for sales. We are increasing by 10%, and also the purchases we are increasing by 10%. So to increase in Excel, we just need this assumption here of 10%. So maybe you can just write 10% here. And then also this one the gross profit will be 30% here. So anytime we will be referring to this assumption for purchases and revenue. For purchases and revenue. So I will say equals this multiply, open the bracket, say 1 plus the percentage which you are getting here, which is 10%. Close the bracket. Now, we remind ourselves what we learn about F4. So this 10% will remain fixed. We want each time to move a cursor tuna reference kwa e point. So I will make sure to fix that F66. So I will press F4 to give me $2. Hit the enter. So you can see that is the price. When we increase, we are getting that. We don't need to fill that. So once you do that, you just need to right click here, click Control R. You have done everything. What you do, copy this, go to Format Painter, apply here, get your sales. If you check this, we are increasing by that. We are referencing that 10%. You can see. Very simple. So very simple. So that is how to increase in Excel. You just multiply this, open the bracket 1 plus that one. It is the same if you say this multiply by 10%. If you don't know how to use my formula, and then thereafter, you can just say, click that one in this one. You can just say divide by 100% again, which will be, I think my Excel is contaminated. You can just say this multiply by 0.1. So it is equal in percentage. Where is it? This multiply by 0.1. And then plus that one. Ukitaka kufanya increase manual. So unaweza fanya tu ile normal. This multiply by 0.2 to get that. And then after umepata hiyo, can just say plus that one. And then unaweza drag it. So it will keep on doing the same. You can see, you can get the same. So si lazima utumie my formula hii nimetumia hapa. You can do the manual and you will get it. So long as zinakusaidia kupick the values automatic. Now the same goes with the purchases. So I will just need to copy this and paste it here. So if I copy that and paste it here, it will pick this and it will reference my point here. So you can see it is very easy. Then once you do that, just need to select Control R. Now copy everything. Copy this format by clicking this, Control C. Go to Format Painter, apply here. You get the format. Now, opening stocks, we have it here. Closing stocks here is the opening stocks here. Closing stocks for 2024 is the opening stock for 2025. Is the opening stock for 2025. That's what we know as accountants. So I will equate here. I would say equals to the closing stock, closing stocks. But I have to put a negative because this is this is a negative and this one should be positive. So I have to put a negative here. Click the enter button. So also you can't apply the same format there. So this will be opening stocks. Now, we have closed stock. This is the cost of sales. How do they get this cost of sales? Let's come here. So cost of sales add hizi mbili wakapata the total and then subtract this. So which we can even do the same. That select up to that point at that. So this one we can easily get our total purchases, but now we don't have our closing stocks, but we have our gross profit here. And also we have been told the gross profit is the 30% of the revenue here. gross profit is the 30% of the revenue. So I will say here equals this multiply by whatever I have it here. And I can fix that by pressing F4, enter. So this is my closing stocks, and I can put the bracket, close the bracket, start with the negative. And then I can copy the format again here, paste that. So that is the format. Now, you can see this is our cost of sales, the same. Can get now gross profit by taking that way. So this is our first gross profit for 2025. Now, which you will do the same. You can copy this and paste the same, just Control R. This one, Control R. This one, Control R. And it automates everything. So you only need to do one, and then everything will be automatic. Everything. Let's see this if it is 30%. This one, where is the gross profit? Oh, this one. No, our gross profit here should be. How are we getting this? It should be 30% of. You want me to make 30%? No, this one should not be 30%. So this is where we go wrong here. So this one should be 30% equals this multiplied by 30% here. Locked that. Good. So this is our gross profit. Now for us to get this, we will say, we'll have to, how did we arrive at the gross profit? You take the sales plus this. So that's how they arrive at the gross profit. Yes, sales plus this. Now, we have sales, we already have this, but we don't have this. And for us to arrive at this, we have to take this plus this so that we arrive at this. Okay. So, how can we figure out the formula we are going to put here? Hello? Niko salama? Yes. Oh, the audited. Let's figure out how can we arrive at, how do we get to the closing stock? We have this and we have this. We have the gross profit. So, okay, so which serves me to say, let's remove this first. How do we get the total cost of sales, which is this? For us to get the gross profit, this minus this, which we have it here, we have. So which means we can get this and then work backward. So which means you can say, this minus this for us to get there. That is the total cost of sales. And then let's put the bracket. Let's put the bracket and start with the negative. So that is our total cost of sales. So this total cost of sales, if we add this plus whatever we have it here, we should have this. So which should be this plus that. So to give us a closing stocks here. Also, let's open the bracket. Let's open the bracket and start with a negative. Yes. So if I add this, I should get 65, 3465, which is this one. And then to give me a gross profit, which this one should be opening balance here. So where have we inserted the formulas? I think these two. So you can select the two. Up to that, click Control R to copy the formula across. Now here, why are we getting this green something? Okay. That 30% of that. This one, we have to first select this up to that to get 30% of that. 30% of our sales. That is okay. That's okay. Then we will fill. So if you add this, you are getting this. Great. Now we are done with the first projection. We are done to the first projection. Umefika hapo ama umekwama mahali? Yes?
Hapo kwa gross profit ndio nimebaki.
Kwa gross profit. Haya, umeipata kwanza hii 1485, 30% of the sales. Share screen. So you can able to share the screen. Ama Zoom meeting utumie laptop.
Sijatumia Zoom meeting na laptop.
Yes?
Sijatumia Zoom meeting na laptop.
But so you can be able, umeshapata hii gross profit. See, you just take that sales 49.50, that is E10 multiplied by E30% yenye umeandika hapa. Inakupea hii 14. Haya, ukishapata hiyo, drag it, copy mpaka hiyo 2029, itakupea the gross profit zote. Then we come to calculate now hizi mbili, hizi ngoza tujapewa hii moja hii. Remember, hii ndio tuna calculate, which this one can able to give us that. So fanya hii kwanza, and then ingine tutazicopy. Kwanza umelink opening balance kwanza hizi. Na ukadrag mpaka 2029.
Yes.
You want to download any desk? Will you manage kweli?
Lord. No. I didn't.
Yes?
I didn't.
Will you manage?
Click manage, I forgot.
So utai download, because you can see hizi vitu zote involve doing it. So kama utafanya utapata. Make sure at least unaifanya ni kulink to formula, and then una drag, inafanya formula, inafanya kazi yake. Okay, now for expenses tumeambiwa administrative expenses distribution. So what is the rate for expenses? Admin will grow at 5% per annum. So you'll have 5% per annum, which I will just, it will grow. So I'll just say equals, multiply by this in bracket 1 plus whatever I have it here, and then press F4, enter. Yeah. Am I getting 0? Unless this is not the number. Or even you can just say plus 10%. There is no need. So long as to indicate the percentage, I think I'm getting 0. This is not the number. So let's change this to number here. And then to change it to accounting. Put non-currency. Don't need a currency. Let's try this multiplied by, you can even, instead of referencing down there, you can just say 1 plus 10%, and then click the enter. This one is working. Where is it? This one is not working. Now it is working now. Hey. Oh, this, if you check this one, is a reference. You can see it's referencing question 21 somewhere. So if you put this one to numbers, can be able, there is something inside that, so we can be able to get good. Now copy the format for the two, not for that. Copy the format for this. So, and then we just need to drag it. Ukishafanya moja, you drag it. Itafanya hizo zote. Very easy. The same with this, you just need to drag. It will do everything. So, get the total, the earning before.
Umeformatia wapi huko? Mi bado inanipea 00.
Hapa. Hebu click hiyo ya kwanza. Unaona kuna imeequate question something.
Oh yes. Hiyo 210.
Yeah, delete hizo writings mpaka ubaki tu na 210. Imesha kupea 231. So ukishapata 231 una drag. Good. So for us to get the earning before interest, tax, depreciation, and amortization, you just need to click and see. That is the reference. So you don't need even to, you just need to drag this to get that. What about the depreciation? We were told depreciation, there is a rate for depreciation here. Depreciation and amortization, tulikuwa tumeambiwa, no, selling and distribution will grow at 10%. Have we done that? Selling and distribution. This one is 5%, sorry. And the other one is 10%. So